like any product, a unit trust product, despite the fact that it is a regulated product, but unless you look at the mandate of the particular fact sheet or the prospectus of the particular fund, then only you know whether it's really an Asia Pacific equity, or some fund may claim themselves to be a REIT, but then you discover that they actually buy property developer stock. So that's not REITs. Number one, you need to check whether that is really the asset class. Number two, I want to emphasize the importance of this best of breed concept. Many people complain to say that when I invest into unit trust, I do not make the kind of return that I want. Okay, so of course, first you want to diversify in terms of asset classes, but second, you must also select the best of breed fund. Okay, just how you mentioned, Asia Pacific. So most people, if their agent is from say company P, most likely you will end up company P's Asia Pacific fund. But my question to you, have you done an evaluation whether company P's Asia Pacific fund belongs to one of the best of breed across 30 over unit trust company in Malaysia? Or maybe there's a company A, which you never hear the name of this company A before. Of course, they are regulated, but they have got one Asia Pacific equity fund which perform much better consistently over the year. So if you ask me, Mr. Yap, if I have diversified but I still don't get a better return, okay, maybe your diversification in terms of asset class done well, good, but as far as best of breed is not done well, because to achieve a good best of breed, you need to evaluate Asia Pacific equity fund from the 30 fund company, which one can give a consistent and better return. Come to global equity, which are the 30 company, which are the global equity fund can give a better return. So then I would say your chances of losing money is rather low if you were to invest into a diversified portfolio plus best of breed. Because in Brickman, I can say based on our experience, for those clients who diversify and who has got more than 3 years investing period and select best of breed, we do not see any client actually lost money. So that, I hope, give you more confidence. This is a very practical question. We know EPF do not give us a high return, but it has been giving us between 5 to 6% return annually for many years. So my answer very simple. If you got time, you got skill, you got investment opportunity that can give you a consistently better return, I would say at least 2 to 3% return, higher than EPF, you should look at it. My question is that how skillful are you in selecting the fund? How skillful are you and how much time do you have to monitor the fund that you selected under iInvest? So from your experience, have you been able to get 9 or 10% return after the fee or after any expenses? So if you can, please go ahead. But if you find it challenging, you don't have the time, you don't have the skill, you don't have the patience, then I would say you must well forget about iInvest, because chances are you may invest and you end up losing money. Not only you don't get the return as high as EPF, you may end up losing money. So that's why the most important part is that do you have the skill and time and the discipline to get the kind of return. If money is important to you, please remember to subscribe to my channel.